Welcome to all you one rental at a time viewers. Brian Lebo here from Las Vegas, and today I'm going to take the show over while Michael's out there gallivanting the globe. So today I'm going to discuss why I've suddenly become bullish on this housing market. Now, I realize to most of you guys I sound utterly absurd right now. All we've heard is housing crash, housing correction, job losses, and the world is coming to an end. But rather than engage in hyperbole, I want to share what's happening and likely to happen instead of focusing on what's already happened. So let's go ahead and dive in. Now, let's cover some quick statistics real quick to get an overall baseline. Las Vegas sales reached another all-time low last month of only 1,130 sales. This comes after 4 consecutive worst months ever. In short, January sales were down 53% from last January. So the media is likely to report slumping sales yet again, but that's only half the story. While true, what's also true is that pending sales exploded to about 2,300 right now. So what's pending today will reflect this month and next month. In those terms, we can predict the future. Now, median prices have fallen for 7 straight months. For the first time, the median price held steady at $420,000. But now let's check out inventory. While inventory declined for 14 straight weeks, that's kind of what's supposed to happen. In fact, that happens basically every year until around mid-March. Right now, we have about 5,500 homes on the market. This translates to roughly a 5-month supply. Now, while 5 months sounds stable, that's only because sales have been terrible. Okay, now that we've established our baseline, let's talk economy and interest rates. With the tech industry laying off 50,000 plus jobs, there's been doom and gloom everywhere. Just recently, the jobs report reflected the lowest unemployment since 1969. So it's kind of difficult to be bearish when unemployment is actually improving. Now, in November, I made a video series explaining how and why this housing market was nothing like 2008 and how it was possible that this correction could be short-lived. Now, my conjecture had to do with affordability, specifically the impact on monthly payments. Now, my assertion was that it would be a combination of price declines mixed with rates coming back down from 7%. We don't necessarily need 3% interest rates, but if prices come down 15% and interest rates hit 5%, we're essentially right back to January of 2022 again. Well, guess what? Recently, rates broke past 6%. Now, I'm going to do an entire deep dive on how mortgage rates are derived on my channel later this month. But without going into tremendous detail, mortgage rates are actually tethered to the 10-year Treasury bond. Now, historically, mortgage rates tend to be 170 basis points above the 10-year Treasury bond, or 1.7% in layman's terms. Well, lately, with all this fear and uncertainty, mortgage rates have actually been trading at 245 basis points above the 10-year. Now, as an example, the day after the Fed announced a 1/4 point increase to the Fed rate, mortgage rates actually went down. Now, I'm sure a lot of people out there were scratching their heads on that one, but now you kind of understand that that increase was already baked into the deal to begin with. The fact that the Fed is looking to calm down and the economic climate is improving meant that the risk on mortgages went down, and therefore the rates reflected that lessening risk. Now, since mortgage rates are trading 75 basis points higher than the historical 170, it's fairly all but guaranteed that at some point soon, rates will fall about 0.75%. Now, put simpler, rates could hit 5.25% by late spring. Okay, now that I set the stage, let's put this all together and try to wrap this up. Prices are down about 15% here in Las Vegas from the high. We've got buyers and investors that have sat in the sidelines for almost a year waiting for this crash to be over. Interest rates are falling and inventory is only at a 7-week supply under, normal demand. So what do you think is likely to happen in the next few months? With such a short amount of supply, soon buyers will realize that the bottom of the market has already passed. So what happens if rates hit 5.25%? Sideline buyers come back out and we only have a 7-week supply. Well, it's back to Econ 101, guys. Supply and demand. If supply remains consistent or continues to decrease and demand increases, what happens? Correct. Prices increase. Now, I'm not predicting another 10-year run on the market here, but I think it's a fair conjecture to say that this crash is turning out to be more like a correction after all. So if you're looking to invest, you better get very aggressive and start get going immediately. Builders are already pulling incentives off the table, and soon a lot of these sellers are going to be less willing to offer concessions. Now, especially if this market turns back into multiple offer situations, you get where I'm going. Well guys, that's it for this video. If you like my take on things, please check out my YouTube channel and contact me if you're interested in any Las Vegas real estate. Until next time guys, deuces.